Hello and welcome to the Market Watch Review. In today's release, we'll be covering the following topics. Britain is leaving the EU without a deal, the collapse of the Great British Pound United States dollar currency pair, and sale on the oil market. I'll start today's review with one of the most unexpected and resonant pieces of news. Britain is ready to leave the EU without a deal. This news was spread by quite a lot of reputable media. What makes this news unexpected and resonant is that on Friday, everyone was expecting a deal to be concluded over the weekend. As a result, demand for the Great British Pound increased, contributing to a further increase in interest in risk. But today, the situation has changed dramatically. In the first few hours of the European trading session, the Great British Pound United States currency pair fell by more than 200 points. At the same time, official confirmation that Britain is ending negotiations about reaching an agreement on a global deal will put additional pressure on the pair in the medium term. However, unexpected progress in these negotiations should not be excluded. Let me remind you that Boris Johnson has previously threatened the EU without a deal. Shifting to the US session, I will pay attention to a moderate decline in futures on US stock indices, while the so-called fear index, VIX, returned to the green zone. Given all this, the US dollar has the potential to grow and, as a result, return some of the previously lost positions. With the opening of the market in the US, the demand for the USD may increase significantly. Pay attention to the euro-US dollar currency pair. The general increase in uncertainty about the prospects for a deal between the EU and Britain has significantly increased demand for the US currency. Let me remind you that the USD serves as a protective asset, so in moments of uncertainty, it strengthens. As a result, there is a risk of further weakening of the pair to 1.2050, the previous low, a break of which will open all the way to 1.1900. Another risky asset is oil, so before the opening of the US trading session, the price of the WTI benchmark oil fell below $45.5 per barrel. But only a further increase in the uncertainty can return quotes to the next strong technical support level at $44.6 per barrel. Let me remind you that the recovery of the global economy and industrial production in particular contributes to the growth of oil prices. Therefore, only the appearance of a threat to the further development of the world economy will return sellers to the oil market. That's all from me. Closely monitor the news and background and be prepared for all the surprises of the market.